Halstead Property, the real estate leader in video technology.
Hi, I'm Angela Cohen on this gorgeous autumn day in Greenwich, Connecticut for the third quarter episode of Behind the Numbers. In this installment, we'll highlight how the Fairfield County real estate market performed and what led to those changes. I'm joined today by my tag team partner in crime, Halstead Property's own chief economist, Mr. Greg Heym.
Thanks, Angela. It's a pleasure to be here. It really doesn't get much better than Connecticut in the fall, does it?
It does not. We're filming this quarter from a beautiful federal-style farmhouse that includes 3 original historic structures from Applejack Farm. The main house was newly constructed with a modern floor plan, including 5 ensuite bedrooms and all amenities for today's living, yet is finished with authentic details, including antique chestnut flooring, reproduction period door hardware, 3 fireplaces, and generous ceiling height. In addition, the converted 2-story barn circa 1890 has 2 bedrooms, living room with fireplace, kitchen, and mahogany deck. This beautiful country home has the look of a restored Connecticut farmhouse, yet the benefits of modern design and technology, represented by appointment only by Finlay. It's time for Greg to flex his chief economist muscle and get behind the numbers of the real estate market in Connecticut. We're going to give a comprehensive view of the individual market conditions in each town. Let's begin right here in Greenwich.
Okay, the average price fell 3% over the past year in Greenwich to just under $2.4 million. It's important to note, however, that this decline would have been greater had it not been for a $32.5 million sale during the quarter. The market was also less active, with 5% fewer transactions than the third quarter of 2010.
Well, let's go next door to Stamford.
Well, Stamford saw a 26% increase in the number of transactions over the past year, the largest increase in sales in any of the towns we looked at in the report. Prices were lower, however, as both the average and median prices were lower than 2010's third quarter.
That was quite the increase in sales. So how did Darien fare?
Well, prices were slightly lower in Darien over the past year, with the average falling 2% and the median just 1% compared to the third quarter of 2010. The market, though, was less active in Darien, as we saw 22% fewer transactions than a year ago.
And did we see that in New Canaan and Norwalk as well?
Well, in New Canaan, despite a 20% decline in the number of sales, we saw the average and median price rise over the past year. In Norwalk, we saw a decline in sales of 23%, with the average price 7% lower compared to the third quarter of 2010.
Okay, so those are some pretty mixed results. Let's see what's going on in Wilton. You seemed pretty optimistic about the numbers there.
Well, Wilton was the only town where the average and median price, as well as the number of transactions, were all higher than a year ago. Also, homes sold quicker than they did, taking an average of 108 days to sell.
All right, so let's round out the roundup and talk a little bit about Fairfield and Westport.
Well, in Westport, we saw an 8% decline in the average price over the past year and a 17% decline in transactions. Fairfield actually saw their average and median price higher, although sales were lower than during the third quarter of 2010.
Let's talk a little bit about the economy now. How do you think those numbers stood out?
Well, concern about the global economic situation and the debt level of many countries intensified in the third quarter, which led to the worst performance in stocks since the start of the financial crisis. This led many investors to seek the security of U.S. Treasuries, which in turn brought mortgage rates down to record levels. Locally, New York City added almost 65,000 jobs in the first 8 months of this year, almost double the job growth seen in the first 8 months of 2010. Here in the Bridgeport-Stamford labor market area, which includes all the towns in our report, we did see a minor loss of 1,600 jobs in the 12 months ending in August, but the unemployment rate did fall during that time.
Now on to our Ask the Economist portion of the show. Anne from Facebook asks, will mortgage rates continue to drop in your opinion?
Well, Ann, I think they will. We've seen mortgage rates reach record lows over the past couple of weeks due to the sluggish pace of growth in the U.S. and the world economies, leading people also to buy treasuries, bringing their prices up and their rates down. Also, you combine that, which again is expected to continue in the next couple of months, with the Federal Reserve's new Operation Twist program, which is specifically designed to keep long-term rates down, and I think mortgage rates will continue to dip a bit, certainly over the next couple of weeks.
Well, that does it for Behind the Numbers. I'd like to share some exciting news with our Connecticut audience that Halstead has expanded and joined forces with real estate firm Devlin McNiff in the Hamptons. If you'd like to get some more information, go to halstead.com/Hamptons. This is Halstead's 21st office as their strategic growth continues.
Well, that's our show for this quarter. For my co-host Angela Cohen, I'm Greg Heym. Thanks so much for watching, and we'll see you next quarter.